All right, folks, we're going to go ahead and get started. We're not going to take up too much of your time tonight, maybe about 30 minutes or so, just a couple of topics that we wanted to discuss. And we wanted to pull everybody together so we can make sure that we have some clarity across the board. This session is being recorded, guys, so I'll provide that link later on for you guys that were not able to show up. Okay, with that being said, we're going to go ahead and cover a couple quick points. Can you see my screen okay?
Yes.
Yeah, I can see it.
All right, perfect.
Yep. Gotcha.
Perfect. All right, and we're going to look at this activity sheet because there were some questions that were presented today about the content and the activity in the sheet. This status line right here. We had some pending orders throughout the night from yesterday going into today, and it would look like something like this. The pending would be in this status column. And there were some questions and concerns as to what traders should be doing upon getting the alert for the pending. That pending, when these numbers file into the entry, the stop, and the limit, those are the actual limits that I'm expecting to be fulfilled. Then once they are fulfilled, ladies and gentlemen, it would automatically go active. There's really not a major need to send out an alert for your order to become active because your platform will take care of that for you. The alerts that we're going to be sending out are going to be the pending and then the closed. Everything else is going to operate quietly in the background. The second part of that deal is over here in the closed and the deleted column. Right here for the US JAPI and the Australian JAPI respectively, there were no setups. We were looking for a candlestick formation and I didn't see it. So I will take that particular pair and delete it. We had one that we missed right here, this GBP New Zealand. We missed it last night. And because we missed it, it took off and ran 100 pips. That's what that column right there in the status, that's why it says missed, because that's a trade that took off. The market opened up and gapped above our 786 entry and took off. We had to wait for that thing to form a proper high, which is two candlesticks to the right and two candlesticks to the left, but it just kept pushing up and there was no qualified point of entry that I could suggest. So we noted that as such as a missed pair. Anybody have any questions about that? All right,
No,
very
but
good.
if you could zoom in just a little bit on the spreadsheet, maybe
Yes,
10%.
absolutely. Does that help?
Oh yeah, much better.
Yes, it does.
Okay, very good. Okay, right there in the status column about the missed entry right there and the pending entries. This is what we're going to start to see tomorrow. The pendings, the ones that are active, if the levels for the entry are the same, everybody's going to be active at the same time, which is going to cut down on the alert traffic that everybody's receiving, understanding that everybody has something else to do opposed to sit around and wait on alerts. Everybody else has a life to live, and all the active alerts that we're sending out can become overwhelming. So we want to try to minimize the alert system to where it's as efficient and appropriate as possible. So we're going to start to send the pending alerts out and then the closed alerts out. That way, if something happens and we got to exit the pair before our limit is fulfilled, our traders will know. Is that fair enough, guys?
That's
Yep.
fair.
All right, perfect. Now we're gonna try to slide this thing down here so you can see where we were talking about the closed comments. I like to always put in some type of commentary to an entry and an exit. That way our traders can understand at least what we're looking at, be it a sub ABCD, a 618, or a stochastic being in this appropriate zone. We're buying the backside or selling the backside of a counter trend line at a pivot point. I'm going to tell you something as best as I can. But in the closed column, there's going to be something that happened, specifically like the market gapped above our 718 entry right here for that GBP New Zealand pair that happened on Sunday night. So we just want to give a little bit of clarity on how this sheet works and how you can discern it easily and effectively. Good on that?
Yep.
Perfect. The other point I wanted to take is what this sheet is based on. I use what they call a 1-2-3 strategy, and it's a counter trend line and a stochastic and a candlestick formation shaping up at the same time. And there were some questions that came in today as to what 1-2-3 meant. That's exactly what it is. We use a RSI, a relative strength index, stochastic. When that thing gets in the buy or the sell zone, whichever one is appropriate for the style of trade that we're going to do, we need that in conjunction with the bullish or bearish candlestick formation, breaking a counter trend or an aggressive counter trend line. That's what the 1-2-3 is. It's nothing magical. It's just I saw people having some questions off the playbook that resulted around the 1-2-3 strategy, and we just wanted to clarify that up for these guys. That being said, we can take a look at a couple of charts right quick. There were some guys that had some concerns about us exiting some trades prematurely today. Before we go to these charts, I'll show you that we shut some of these trades down because my terminals were taken offline. That's what it came down to, guys. Doesn't happen every day. Today was the day. But with all that said, we look at the GBP US down here in this bottom right-hand side. That may be a little too small for you guys. There it is. That's the trade that a lot of people were jumping up and down about why we exited. But truth be told, as this thing is pulling back a little bit right here, we're going to get us another entry point on that, guys. It's Monday. We've got a whole nother week, or the rest of the week for that matter, to finish these candles out and try to hit the pip accumulation that we're after. So sometimes we get out of trades. Sometimes we get into trades. They go our way. That's great. Sometimes they don't. That's not great. But we don't want to get too high on the high, and we don't want to get too low on the lows. Today was a good trading day. We look to replicate this effort day in and day out, every single day. This is what we look to do every single day, guys. Fair enough?
Great.
Curtis, do you have anything? Chima, do you have anything?
I do not. I think you explained everything well.
All right. If that's it, fellas, or ladies and gentlemen, I should say, because there's some women on there, what we'll do is we'll compact and consolidate this webinar. We'll put it on a link, and we'll send it out, like I said, to the guys that couldn't make it. I just want it to be very, very clear going forward. I didn't want anybody to be in the dark about how this activity sheet works or what the columns mean. And I think that
So we'll
that's
be able
pretty
to
much
see
going to cover it all up.
X.
Yes, sir.
X.
Yes, sir.
So we'll be able to get online and see all of this stuff as well, or review it again.
Absolutely.
Okay.
Absolutely.
I
This
do
is a
have some
recorded
questions,
session.
but I want to do.
It's not a problem. It's a recorded session. We're gonna provide the link for you. It's no problem. We'll get it out to you.
Okay, great. I
Okay.
appreciate that.
There is one thing additional that I did see. I think one of the guys asked about it a little earlier today about the volatility around the pairs. And that comment comes from this column right here, ladies and gentlemen. It's called the daily trading range. The Euro New Zealand retraced a little deep, or really deep, almost 100% retracement today. And if you look at this thing, it has a 305 pip daily trading range. You're going to see some volatility in that trade. The Euro Australian moves 307 pips. You can see that right here. That's the trade that we took twice today, guys. You remember we took it at the 618 and the 786 on that
Yeah.
retracement pullback. The GBP Australian moves 278. My area of concentration is the higher volatility plays. These are the trades that I like to trade. I trade them over and over and over. Sometimes you'll see us trade the same pair 4 or 5 times in a week. That's just because we understand the heartbeat and the pulse and the frequency to which this thing beats to. And it's a really good volatile trade if you can catch it the right way and ride the volatility wave. Even if you're not looking at an Ichimoku cloud, for instance, you can still have a very good push on a high volatility play. That's what that was all about. The question that came that stemmed around why is the Euro New Zealand acting so prematurely? Now, Draghi came out today and had some commentary, and he's, as Chima well put it today, he's been pretty dovish lately. So he's going to make some charts move a little bit. He's going to push a little energy and electricity into the market. But all in all, guys, when you're looking for these major swings, you're wanting to pay attention to this daily trading range on whichever pair it may be. Just take a look at your daily trading range, and it will give you a real good idea on how much movement you can expect to see on a day in and day out basis. That's that question.
Where it says trade at, I have a question on the trade
Go ahead, please.
column.
Yes, sir.
What these are notes about, it looks like when to do the trade. Is that what that is for?
Well, as we're building the trade, this sheet is dead right now because we're not in any pending trades. But what you'll see is we trade the 2-hour candle. So when we go to build trades tomorrow morning, I'll be building some trades at 4 o'clock in the morning, and I'll put at 5 o'clock or 7 o'clock, depending on where that stochastic is. That's kind of my ledger, my ruler, if you will, or the barometer to which I can gauge where this thing is going to be setting up about. And then you can look at your candlestick formation. So a lot of times I will put in a time where our traders will find out ballpark area if I can provide it. If not, it'll just be a day there. We'll say, because when you wake up tomorrow, you'll see a lot of stuff there that says Tuesday. What time Tuesday, we'll define that as we go through. And again, as a trader, you can make the conservative or the conscious decision to stay in a trade as long as you may see, or exit a trade as long as you may. It's not. I'm never gonna say that my trading journal is gold. If you decide that you want to stay in a trade a little bit longer, that's fine. It's nobody's gonna jump up and down about you making some extra money. And if you decide to exit that trade, that's fine too. There was some commentary that came in there about why are we exiting this trade with your terminal being taken offline. Well, there's the diplomatic answer for that, guys. If you want to stay in a trade, by all means, it's okay. Anything else that we have, or we'll power it down and get ready for tomorrow.
No, real quick question. This is
Yes, sir. Go ahead, Mr. Brown.
Okay, the last column where you have total pips, is that your cumulative total for that particular pair that you did for the week or for Pacific time?
Yes, sir. Right here, this T pip right here, the first. This is accumulation going up because all of our active trades will be at the top. They will be right here at the first column. Okay. We don't have any active right now. So as we enter the active trades, it will create another line item right there, and this will be active.
Okay.
But this number right here, this 259, this is all of these trades combined. And you'll see the first one, it was 4.8, then it went 42.5, then 58.6. That's because it's an additive.
Okay, so, I got you. You start from the bottom and get the total from the top.
Yes, sir.
Okay,
This is the Euro Australian, and that's just how we calculate the pip count as we go. Because the sheet will auto summarize by closed activity. It's not going to take in consideration any pips that we have in active trades until we close them, because a trade could very well reverse and we have to put a negative there. I don't like to do it, but sometimes it happens.
No, my brother, you did an excellent, a superb job today.
Thank you kindly, Mr. Brown. I appreciate that. Is there anything else, guys?
Yeah. So we should
I have a
expect
question.
Go right ahead.
If we can go back to the DTR and let's go over that one more time as to how that works.
Okay, this DTR right here, this is called a daily trading range. I personally like to trade the higher volatility pairs, the guys that move 250 pips plus. The New Zealand CAD moves 109 pips. So if you see a trading range, it can help you gauge if you want to take that trade or not with the association of the volatility that that pair carries. Because a New Zealand CAD pair that moves 109 pips a day is not going to move as fast as a Euro New Zealand pair will. I can personally stomach the volatility and the pullbacks and the up pushes from these higher volatility pairs. I'm not suggesting that you would have to, but these are just the type of trades that we like to get into. The GBP Australian down here with 278, the Euro CAD with 269. Me being a widespread trader, I have to take in consideration that somebody's not going to be in agreement with something that moves as much as the Euro New Zealand. So we have some trades on here like the Australian CAD that moves 109. All that is, that daily trading range is just how many pips a day this particular currency pair traditionally moves in a current trading day.
Right. It's the difference between trading Microsoft and Netflix.
Correct. And Mr. Brown, I think did you have something, Mr. Brown?
Oh, no, I asked the question.
Okay.
I'm the one that asked the question on the total pips.
Okay, I think was it Mr. Wilson that had a question?
Yeah, I was going to ask what time. So we're going to go hot tomorrow, 4 a.m. That's when we should start looking out, or are we going to?
No, sir. That's a real good question, Mr. Wilson. No, sir. I'm not asking you guys to wake up at 04 and wait. Let me wake up at 04 and do some charting and see if we can find something that's appropriate for our 5 o'clock candle. If not, let's go back to sleep and wait for the kids to get up. And I say that because I don't want you to feel like you have to run parallel with me. Let me do the heavy lifting, and then I'll send the alert out to say, hey, guys, we got something pending. If we don't get that alert that goes out to say something's pending, then let's just go on with our day.
I have a question about as you know, I'm new to this, so I may be asking questions y'all all know the answer to already.
It's okay.
But when something is pending, what's the time frame, or how much time do I have to get into that trade before it's no longer pending?
Well, my suggestion is when you see something that's pending, you go ahead and grab it. A lot of times we'll have till the close of a candle, and if you get that pending, just in a simple form to answer that question, Mr. Bulls, if you see something that's pending at 4:45 in the afternoon, that next candle opens up at 5 o'clock. We're going to be on top of that candle, or on the bottom of that candle for that matter, because we trade 2-hour candles. We usually have a good bit of time, I like to say at least 30 minutes before we have to do something. But a lot of these active traders, this is what these guys do. So when we send the alerts out, we're not having a problem with anybody getting filled because they missed the entry, with the exception of the GBP New Zealand, because we all missed it. Fair enough?
So the chart will include entrance time, well, not entrance times, but it'll let us know something is pending and to get on it. How do we know when we should get off of it?
Then you'll have a closed. You'll get an alert to say closed.
Okay.
We'll send an alert out and we'll tell you that it's closed, and we'll give you some type of reason to close them. Today we did a close all because we took our terminals down. But the reason that we were comfortable doing that because we were in excess of 200 pips, and that's really not a bad trading day.
Right, rather than don't top in on the bottom every day.
Okay. Were you done with your question, Mr. Wilson? I'm sorry?
Yes, I'm good to go.
Okay, very good. Is there anything else that anyone has?
I'm sorry. I have a quick question.
Yes, sir. Go ahead, Mr. Como.
Coach X,
Yes,
can you explain this alarm column to me, please?
The alarm column. Very good question. That alarm column right there, this column is what I use. This column should not be on the sheet because it has nothing to do with what you guys do. This is what I do to check and double check and recheck to make sure that I'm not missing anything on my side. All these alarms is inside my trading platform. I put something that says, for example, the GBP Australian, I have an alarm set to enter the buy the stop at the counter trend line. That's what those letters mean to me because it
Okay.
tells me that I already have an alarm set for this specific pair and I can move on to the next one. Because once I have a chart that's pending or I'm working on it, I go to the next one. I don't watch the same chart all day. Matter of fact, when we're in an active trade, I won't watch that trade at all. I'm looking at another trade for our next potential setup because we have this alarm system that will tell me or notify me if something's going bananas.
So it indicates, and I got your message, but I just wanted to be clear. But it indicates which part of the 1, 2, 3 trade that you're waiting on,
No,
and
sir. No,
when
sir.
you're gonna go.
That just
Okay.
tells me what the alarm that I have to trigger something to do with the trade. Because I may have a candlestick formation and I may
Okay,
have
I
a
got you.
stochastic,
Okay.
but now I need a counter trend line break. So I'll put an alarm to say once this thing breaks that trend line, then we can go in here and we can do something about it. We can set some appropriate levels at that point.
Okay.
Does that answer your question?
Yes, and no, but I think I got a little bit more reading to do, I see. But yeah, definitely.
Okay. And this, just to be clear, while we're on this side of the sheet, these columns right here, the
Mhm.
CE, that's a calendar event or a fundamental announcement, if you will. And then we have a calendar event or a fundamental announcement, if you will, and the date. That right there, guys, is just letting me double check a box that I don't trade into a bad situation, like Mr. Draghi or something like that. Janet Yellen gets on the mic, and a lot of times she brings a lot of energy. uh, the Fed announcements, a lot of these fundamental announcements, they bring a lot of energy into the market. That's why they are red folders. And I just like to make sure that I either know it's coming or I can tell myself that I saw it coming. That way we don't run into any situations. Uh, trading into a web is what I like to say. And I try to prevent myself from trading into traps as best as possible. But the market is unpredictable and you can't see everything coming. But that's just another column that I use to help me help you. Mr. Walton says, can we just set the trade up whenever the entry, stop, and limit columns are filled? No, sir. No, sir. No, sir. Absolutely not. And the reason being is because a lot of times I will put entries, stops, and limits on there. Or, for example, this Australian Jappy right here, this 618, that's going to mean absolutely nothing to you on a 1 hour chart. My 618 is going to look a little bit different. So a lot of times we'll put an entry on there and it may move. That entry may change. We don't want to take any trades off of this sheet until they say pending. That's my green light go to you that this trade is ready for you because I will adjust these numbers because sometimes you'll see some candles that spike or they'll retrace or they'll push a little harder. Then I have to readjust that entry level based on the Fibonacci level because we like to take the 618s or the 786s or the Walt 86. Those particular trades are going to change, or excuse me, those levels will change based off the height or the depth of the previous candle. So we don't want to take those to answer your question. No, sir. Just because we have numbers there, please don't take them at that level unless they're pending.
Perfect.
All right. Tenfold. Colonel Walton says tenfold, so that's a good thing. All right. Is there any other questions?
So if and this is my last question, I'm sorry. So if so with the stop and the limit already being there, if you let's say if a trade was pending, for whatever reason you missed a pending alarm and it went active, uh you could just go in and create your entry, right? And
No,
then
sir.
just maintain your
No,
stop and
sir.
your limit?
No, sir.
No?
Your trade will never trigger without an entry. Now, make no mistake about it.
No, what
You
I'm
can
saying, I'm
get
sorry.
yourself into a trade with an entry without a stop. That's a naked. That's a naked trade or a market buy. I wouldn't suggest you do that.
No,
But you
what I was
can't.
asking is
I'm sorry.
I'm sorry. What I was asking is, if we look at, for instance, let's go to the Euro New Zealand right at the top, right?
Yes, sir.
So if it was pending with all three, entry, stop, limit, it's sitting there. But I missed that pending alarm for whatever reason, right? And then I look up and it's already passed the entry, the 1.67243. Now,
Yes,
since
sir.
I already know my stop and my limit, I can create my entry, right? If I
This
miss
is
it,
correct. Yes, sir.
okay,
Now,
all right,
a lot of times you'll see, you got to keep in mind is that we're trading 2 hour candles. So if you don't get it at 1.67243, there's nothing wrong with taking it at 1.67253 because that last column you got to remember is a fractional pip. So we're only concerned with the one to the left. The fractional pip is that's small change. We're looking at the
gotcha,
overall movement of this trade when you take in consideration how many pips we're looking to grab out of this deal. So yes, sir, you're absolutely right. If you miss that trade for whatever reason, pull your levels out. I would pull the 1.67243. I would pull that level and see where current market activity is and then make a decision from there. Because, for example, that's a really good point, Como, because if you go down to line item 13 right here at the GBP New Zealand, we missed it. That's the same scenario that you just highlighted. We missed that trade, had the levels, and missed it because it was too far away. I can't take that trade 100 pips away. I just can't do it. That's called chasing a trade, and we have no interest in chasing a trade because we concentrate on 20 pairs. We will go find us another one.
gotcha.
Okay, there's no questions down there. All right, is any other questions, guys?
This type column, what does B and S stand for?
Type, that's going to be a buy or a sell. We're either going to buy it or we're going to sell it.
Gotcha.
10-4. All right, gentlemen, if that's all, I thank you all for showing up and giving me 30 minutes of your time. I really appreciate this forum and the platform that we're working on. I really appreciate your feedback. It helps me, and it also keeps me on my game, and it also helps the other traders. Dialogue is good. Dialogue is really, really good, and it helps us all. It keeps me sharp. It keeps you other sharp. It's a really good thing to have open dialogue, and I appreciate your commentary throughout the day, gentlemen and ladies.
All right. Thanks for your time too. We appreciate
Thank you
it.
very
I
much.
appreciate
Yeah,
it.
absolutely.
Yes, sir. Thank you.
All right, we'll see you all
All right,
tomorrow
everybody.
in the trading log. You guys enjoy your evening. Have a good night.
Have a good night, X.
Yes, sir.
Yes,
Thank you,
sir.
guys.
Bye. Night.
Good night.